Good evening, folks. Welcome to TopGunStockTrading.com. This video is for Tuesday, January 28th, 2014. All right, folks, let's get right into the action today. The spiders were up over $1. The Dow Jones was up over 90 points, and the Russell 2000 was up over 11.80 points. Overall, a strong, broad-based rally off of yesterday's lows came into the market, just like we predicted, right off the levels that we predicted as well. We talked about this last night, and the night before, how we're expecting to get a bounce. 2 nights ago, I believe Sunday night is when I made the first video for this week. I said if the spiders got through 177.32, that we would be a buyer of the SSO at 94.32, and that's exactly the level it came down into. It pierced it by about 20 cents down to 94.12, but I think that's pretty darn close for a $94 stock to hit the bottom within 20 cents, especially if I'm just going off of mathematics off the spiders technical levels, which you should do with a 2 times ETF. You should go off the original or the single ETF, and that's the spiders. So that's what we did. 94.32. We're in. We're already up almost 2 points, which is over 2.5%, and I still believe that this market has some further upside to go. So that's what we're looking for in the spiders. Now, as you look at the hype, last week we had negative news come out. The Chinese were GDP or something wasn't as strong, or I don't remember exactly what their what the slant or the spin on the news was, but something to do with their economic cycle. On Friday, it was the currencies and the emerging markets were getting smoked. There was going to be a run. There was a run on currencies in Argentina and Turkey and India. The market sold this week. Not very much good news either, but we're bouncing. So what's that tell you? Why did we bounce this week, and why did we sell off last week? Well, the fact of the matter is the news doesn't matter. It's all about the charts. The answer is in the charts. It's all about the emotion, the fear, and the greed levels. And when the fear gets so great and all the sellers have sold, then there's only one way for the market to go, and that's up. Likewise, when the market's at the top, like it was back here, and we were saying, hey, this market's up on thin air, it's all hyped up, there's no volume, there's no conviction, there's distribution going on, the institutions are selling to the little guy. This dam is going to break eventually, and it did break, and down it went. Dow Jones Industrial down 500 points. The spiders are down over 50 points from the top here at 184, down all the way down to 177.50. We've been talking about this 177.50 forever. My eye level is actually 177.32, and it's a no-brainer support level. Everybody and their mother knows about it, which, again, like I said yet last night, this makes me a little bit worried about the level, and I think it's going to break eventually. And I say eventually, I mean within the next 1 to 2 weeks, we'll be going back down through that level. And mark my word, we will be going back down through that level within 2 weeks, if we can't make any new highs. So if we don't make new highs here, there's only one way to go, and that's going to be down. All right. So the bottom line is, the answer's all in the charts, and you got to know how to read the charts. You got to let the emotions, check the emotions at the door. You got to take the news for what it is, and it's an agenda put forth by the media and these big institutions to get the little guy into the market so they can sell right into them. So as you can see, as we talked about, as this spiders came in support, we were looking to cover our shorts, and IBB, we sold short at 248. We covered at 238 for a nice gain, and now look where IBB is back up to, up 5 points today, 2.2% to almost 244. And what this is setting up to be a nice another short again. So if we can work our way back up here to the 250 level, 255, maybe in that area is going to be the strike zone again. in order to get another short off on IBB. Same thing with Win. We know the market's coming in support. They coincided with support with the market as Win was coming in as support as well. And again, it bounces up there again today at 2.77% or 5 1/3 points. So all these stocks are getting bounces, and that's why we covered our shorts and went long the market. Look at Yahoo up $1.57 today. Although I think it after earnings today it might have given up most of those gains in the aftermarket. So probably that one's probably going to open lower tomorrow. We'll see how it goes, but still it's up $1.57. That's why we cover our shorts as the market's coming into a support level. So are these stocks. Another signal for us to swap our positions or swap from the short side to the long side to play this small short-term bounce before the market continues lower. All right, let's go into some USO as I look at my notes here and what I want to talk about. USO was up 46 cents. It's a little sloppy position here. It's pattern here. It's basically a bullish consolidation phase to pop through this level. There's no trade here on USO. There's other trades around the corner. This is another thing you have to be when you're a trader. You have to be disciplined. If the trade setup is not perfect, it's time to move on to the next one. You don't take the trade. You're disciplined. And the reason is there is literally a million trades a day that you can take that will be profitable, have good setups. You just got to find them. But you have to be disciplined enough to take to let the not so great or the not perfect trades. You have to pass those up and move on to the next one. So if that's why I'm not really worried. I set my price, my entry price. If a stock gets there, and roger that, I'll buy it. Otherwise, I'll move on to the next trade. And likewise, when I'm in a stock and I get to my first target on the stock, I take my profits, set a break-even stop, and let the second half run. The second half runs to my second target. Then I take my profits. Otherwise, I just get my profits on the first half and let the second half break even. No big deal. It just wash, rinse, and repeat. Again, singles and doubles is what we're looking for here at TopGunStockTrading.com. USO, no trade here yet. I think this thing has some further upside. I don't think there's a trade. I don't see a trade in it right now. I can see this thing going up to Pierce 36 would probably be a good level to short oil when it gets there. Gold had a minor down day, down a penny. No big deal. And as you can see here, I already have the pattern still drawn in there from yesterday's video. We got this large up move, sideways consolidation. Again, we're waiting for that thing to put some more days in there for consolidation. We need a time factor to go there with our price level. And again, I'm a buyer here, assuming that I get the other conditions or dimensions align here. I'm a buyer at a Pierce of 120, so probably 119.66 time frame. But it's got to make the right pattern before I buy it. Like I said last night, it can't come straight down into that level, or else it's no good. So we're gonna let that thing bake in the oven there until probably next week sometime. Now tomorrow's a big day for the Fed, and then where they announce the results of their policy meeting that has happened today and tomorrow. This is again Bernanke's last meeting, so I'm thinking he doesn't want to go out with the markets going down. Could they taper? Could they not taper? I don't know. The charts, the gold is bullish, so who knows what gold's going to do. If they decide to hold back on their tapering, maybe go from they're supposed to go cut $10 billion a month. So this month they go down to $65 billion. If they decide to put that cutting on hold, in other words, maintain the $75 billion in purchases, that will probably send the markets up. If they decide to cut that, maybe instead of doing $10 billion less, they do $5 billion. Again, that'd be probably bullish for the market. If they maintain their $10 billion a month cuts to $65 billion, the markets may see that as bearish and and sell. Who cares? We just play the charts, you know. So we're gonna wait on gold. I don't like getting in front of the Fed, especially with a gold trade. It's like buying a stock in front of earnings. You just never know what those earnings are going to be and how the stock's going to react. It's a gamble. So if I can't accurately predict or compute the odds, and they're not in my favor, then I don't take that trade. And right now, I don't know what the Fed's going to do. I have no idea, so I can't tell you what gold's going to do. It looks bullish to me. It looks like it's going up. So to me, that tells me that the Fed is either going to cut the amount they're tapering, or not taper at all for this month. Maybe put that pause in for a month and see what happens. That's what gold's telling me, is that there'll be the Fed will be doing nothing and the market will go up. Gold will go up as well. So we'll see. Again, I'm not playing it. It's too much of a gamble. Okay, we don't gamble here. If I can't set the odds in my favor, I don't buy the. I don't place the trade. So I'm on hold there. A lot of trading is. Most people will make their money on the trades that they don't do. In other words, the opportunity cost that it could have cost them had they made a trade. So they save themselves some money, and that's what the 3D system does for you. It 3 dimensions to that trade, and each dimension is a mechanical stop, if you will, to possibly prevent you to making that trade. And every trade, you really have to have, as you scan through all your charts, you have to, and you find the good ones, you have to ask yourself why. What's a good reason not to make this trade? Instead of, hey, look at all the profit I can make. Hey, you have to look at the risk and see what the risk is. Hey, how much money can I lose on this? And once you make that mental transition, or get out of that paradigm of how much money can I make to how much money can I lose on this, you start to become a profitable trader. So, and that's how you accurately build your risk reward. That's how you accurately build your percentages, predict your odds of a winning trade. You never want to get in a trade where it's a 1-to-1 ratio, where you can lose as much as you can gain. That's not odds in your favor. That's basically a 50-50 proposition, and you can almost do that well in the casino, and they'll supply you with drinks all night. So not what we do here at Top Gun Trading. We accurately assess the odds and get winning trades 80% of the time. All right, so that's gold. Let's go move on to target. Target's in a holding pattern, kind of a inside bar action. I'd like to see it get above this red bar higher here at 58.60. It was up higher in the middle of the day, as high as 58.29. So I'm taking a hard look at this pattern here. Again, this inside red bar action. If this continues on like this, this might be a flat trade as well, because of the pattern that it's building, a bearish pattern. Once again, we got in right at the support level, 58.26 in this case. So it's kind of, as you can see, over the last month, it's been steadily moving lower, and then we get in at the 58.26, that support. It kind of has stalled out there. So it confirms for me that there is, in fact, support at that level. We're just looking for the bounce now. With the market up today, 0.6%, and target is up half of that at 0.3%. That tells me target may be a little bit underperforming the market, or the broad-based market. So we'll continue to monitor this trade. If it starts to form that bearish pattern, or gets close to completing that bearish pattern, and I think the time is up, then it might be time to stop out, break even on that trade, where our stop loss was set. So that's one of those things. The markets are ever changing. So as a trader, you have to be nimble, and you always have to be changing. That's why we're not perma bulls nor perma bears. We have to swap back and forth as the market changes. Last week we were telling you the market's going to go down. It's up on all on hype and thin air. This week I'm telling you, hey, we've come in the support level. We're going to get a bounce here. I don't care what the news is, but we're going to get a nice bounce here. Let's play that bounce. So, and that's what we've done with the SSO, the SPY. Another stock I got into today at 6.55, so we're 13 cents out of the money here, is JC Penney. This stock is a beaten down play. It's got all the bad news baked into it. They're closing some stores, laying off some workers. Their earnings are horrible. The stock is hated. All right, like I said before, when a stock is hated, by the street, I start to get interested. And the reason why is, where do we get our news from it being hated or liked? We get that from the media. Well, and like I said, the institutions are pumping that out, either to take your shares off of you or to sell into you. So if they're hyping up a stock at the highs, they're usually selling right into you. If they're dragging a stock through the mud, so to speak, at the lows, then they're usually trying to buy the stock and keep it down, trying to get you to sell your shares. So think if you're an institution, you're not out here buying 100 shares of JCPenney. You're not out here buying 1,000 shares. You're out here buying 1,000,000 shares of JCPenney. You're putting millions of dollars in this stock. So if we want to buy 1,000,000 shares of JCPenney's, you got to get sellers to sell it to you. Otherwise, you're going to basically bid up the price, and the price will continue to rise. So you won't get as good as prices if you have more people selling to you. So you have to create a reason for them to sell to you, and these institutions do that via the media when they trash stocks like this at their lows. That's like you'll see institutions will upgrade these stocks at their highs. I think we've talked about this before. Back in 2012, Apple at its highs up here, September 2012, $700. People were upgrading institutions, or upgrading Apple at $700 a share. They're upgrading the price targets at $850, $900, right at the top. All right, why are they doing that? Because they're selling right into you. They're selling right into the normal investor. They hype it up, get the little guy on the street to buy Apple. They're selling right into you. Likewise, take a look at the. I'll use USO. We could use the spot oil here. Give me a second before I can get us back to where I want to go here. Oil running up. 2008 up to $147 a barrel. Again, Goldman Sachs, J.P. Morgan, one of those big institutions, upgrading the price of oil this week, in the middle, right after July 4th, upgrading the price of oil to $200 a barrel. After that, where's it going? Downtown Charlie Brown. Why are they upgrading up here at the highs? Because they want the little guy to buy oil so they can sell right into you. So this year's no different. Gold being dragged through the mud this January. I don't know how many articles I've read saying all gold had the worst year in 2013 and ever, or in 30 some odd years. 2014 is going to be no different. You have a bad year. Sell your gold, get rid of your gold. It's nothing. It's not going to be worth anything. I might be using a little bit extreme or hyperbole there with respect to gold, but the articles are out there, and that's why I think gold will be going up this year. One of the reasons why I think gold will be going up this year. All right, folks, we took a look at JCPenney's. I told you why I bought that. It has the pattern in there, the daily pattern. It's at the bottoms. The news is absolutely basically throwing the baby out with the bathwater with JCPenney's, and I think it's a buy. So, with that being said, let's quick recap. Spiders, again, bouncing off that level, almost to the penny. I wish I could have nailed it to the penny. Its low was 177.12, and 177.32 was my price. So again, 20 cents for the spiders. Likewise, the SSO was the same thing off. Hey, we're looking for a bounce. Where was my first target on this? I think I got this in the Fox 3 alerts, but it's going to be about for the spiders. The price on the spiders would be about 181.25. And for the SSO, it's going to be in the $98 range, somewhere around $98.50, $99 is where I'm looking. Hey, I think it's going to go up, 4 or 5 days right into this 50 right here is going to curl over. Let me enlarge this for you. So this 50 curls over. We get a time factor in here. We get inside bar action. They'll go downtown Charlie Brown here another. Like I said, within a week, but I'm looking for a bounce this week. Probably next week is when we'll look to start selling out all of our long positions and start transitioning back to the short side, and now looking for this market to continue down. As you can see, you can look at this high volume down days here. This is all institutional selling with this volume here. That's all that is. Selling to the little guy. All right, folks. That's all I got. We'll see you on the charts, and I'll keep you updated on these trades. Have a good night.